The exact traits that made you successful in life are the exact reasons you are losing money in the markets. Your confidence, your hustle, your absolute refusal to give up when things get hard. These are good qualities. These are the things your parents praised you for. These are the things that got you the job, the promotion, the degree. You were taught from a very young age that if you just push harder, if you just apply more willpower, you can force the world to bend to your desires. And that is exactly why the market is destroying you. In everyday life, high achievers are rewarded for being the smartest people in the room. Doctors, engineers, lawyers, successful business owners. They come into the trading world with money, with discipline, with a lifetime of evidence that they can solve any problem if they just study it long enough. They enforce their will on the world to succeed. They think trading is just another test they can cram for. But the market is a pure probability machine, and it does not care about your IQ, your work ethic, or the fact that you stayed up until 3 in the morning reading about Fibonacci retracements. The human ego demands certainty. It demands validation. It wants to know that hard work equals a positive result. The market offers absolutely none of that. It offers chaos, it offers a complete lack of control, and it offers the very real possibility that you can do everything perfectly right and still lose money. The system built you this way. You are acting completely rationally based on an educational system and a society that grades you on being right and punishes you for being wrong. But when you bring that programming into the market, you get crushed. The market wins every time. When people hear the phrase trading ego, they usually imagine a very specific type of person. They think of some 19-year-old on the internet, renting a bright green Lamborghini, talking loudly into a camera about how he cracked the matrix. They think of arrogance. They think of loud, annoying overconfidence. But that is not real trading ego. Real trading ego is quiet. It sits in your home office, in the dark, staring at a screen. Real trading ego is the tiny, subconscious whisper in the back of your mind that says, I cannot take this loss right now, because taking this loss means I am a failure as a human being. You do not mean to think this way. You do not consciously decide to link your self-worth to a candlestick chart, but your ego does it for you. Your ego is desperate to protect your identity as a smart, capable person who makes good decisions. This evolves into something incredibly dangerous. It turns into the intellectual superiority trap. You sit down. You spend 2 hours analyzing a currency pair or a stock. You draw your lines. You check the daily time frame, the hourly time frame, the 15-minute time frame. You read the news. You build a massive, complex thesis about exactly why the price simply has to go up. It is a masterpiece of logic. Then you buy, and the price instantly goes down. Instead of saying, well, my hypothesis was incorrect, your ego takes over. Your ego says, the market is wrong. The market just does not understand the setup yet. I am smarter than the current price action. You hold on to a bad trade because letting it go means admitting your brilliant analysis was actually just a very confident mistake. You fight the price. Think about the last time you moved your stop loss. You know exactly the moment I am talking about. You entered a trade. You promised yourself you would risk 1% of your account. You placed your little red line on the chart. You told yourself, if the price crosses this line, the trade is invalid, and I will get out. Then the price starts dropping. It gets closer to your line. It is hovering right above it. Your heart rate turns into the heart rate of a hummingbird on espresso. You start sweating. The red numbers on your screen are flashing, and your brain goes into absolute panic mode. So what do? You grab the stop-loss line, and you drag it a little bit lower. You tell yourself a lie. You say, I am just giving the trade room to breathe. You say, the market makers are just trying to grab liquidity, and then it will reverse. I just need to hold on a little bit longer. But you are not analyzing the market. You are protecting your feelings. Moving that stop-loss is pure ego preservation. By keeping a losing trade open, your ego avoids the absolute finality of clicking the button, closing the position, and admitting out loud that you were wrong. As long as the trade is open, there is hope. As long as the line has not been crossed, you have not technically failed yet. So the price drops further, and you drag the line lower, and the price drops again, and you drag it lower again. What started as a tiny, acceptable paper cut turns into a massive, bleeding wound that threatens your entire account. You freeze entirely. The math becomes a tragedy. You eventually close the trade manually, at the exact worst possible moment, right at the bottom, taking a loss 5 times bigger than you originally planned. all because you could not stand the tiny emotional sting of being wrong. But your ego does not just destroy your losing trades. It is highly efficient. It destroys your winning trades too. Why is it that you will hold a losing trade for 3 days, watching it drain your account down to zero, but the second a trade goes into a little bit of profit, you panic and sell it for pennies? You enter a position, it goes green, you make $50, you make $100, suddenly you are terrified. You are terrified the market is going to turn around and take your little green number away. So you click close, you take the profit way too early. You feel a rush of dopamine, you feel like a genius. Your ego gets to cash in on the psychological high of a win. You get to walk away from your desk and tell yourself you beat the market today. But you are systematically destroying your mathematical edge. You are risking $500 to make $50. You are doing this because you are prioritizing the instant gratification of feeling smart over the cold, boring reality of making money. Good trading is boring. It is incredibly mind-numbingly boring. It consists of waiting for hours, sometimes days, for a specific set of rules to align. Then you click a button, then you wait again. Your ego hates boredom. Your ego equates action with value. If you are sitting there doing nothing, your ego feels useless. So it convinces you to take a trade. Any trade, just to feel involved, just to feel the rush. You stop treating trading like a quiet, boring business, and you start treating it like a very expensive video game. You press buttons for dopamine. And then comes the most dangerous phase of all, the winning streak. The biggest, most catastrophic blown accounts do not happen when a trader is depressed or struggling. They happen immediately after a trader's absolute best winning streak. You take a good trade, and it wins. You take another, and it wins. Suddenly, you have a streak of 5 or 6 green trades in a row. Everything is clicking. The market is moving exactly how you predicted. Your ego does not just feel good, it inflates into a full-blown God complex. You start believing you possess a magical sixth sense. You start thinking you are fundamentally different from all the other people losing money. You think the rules of risk management no longer apply to you, because risk management is for people who make mistakes, and you clearly do not make mistakes anymore. So on the 7th trade, you do not use a stop loss. You double your position size. You go all in, because you just know it is going to work. Then the market does what the market always does. It moves randomly. The trade goes against you. The shock to your system is violent. Your ego cannot process what is happening. You were just a genius 5 minutes ago. How can you be losing now? You close the trade for a massive loss. All the profits from your winning streak are gone in a single candle. And this is where the monster wakes up. This is where revenge trading begins. You take another position immediately. Same direction, bigger size. You are no longer trading a strategy. You are having an argument with the market. Your ego is treating the market like a person who just walked up and insulted you in public. You are desperately trying to force the market to apologize, to admit it made a mistake, and to give your money back. You sit there, angry, sweating, yelling at glowing shapes on a screen. The account drops to zero. It is a quiet, humiliating silence. You close the laptop. You realize what you have done. You realize that you let a bruised ego cost you a month of rent. You are not broken. You are not stupid. You are simply operating under a completely flawed psychological framework. You are trying to survive a math problem using emotions. If you want to stop this cycle, if you want to find actual, consistent profitability, you do not need another custom indicator. You do not need to buy another course showing you a secret moving average crossover. You need to kill your need to be right. You have to make a massive fundamental shift in your brain. Right now, your ego forces you to try and predict what the market will do on a trade-by-trade basis. You want to look at a chart and know the future. You must adopt the casino mindset. Think about the owner of a giant casino in Las Vegas. He walks down the floor. He looks at a roulette table. A guy puts $10,000 on black. The wheel spins. It lands on red. The casino makes $10,000. Does the casino owner jump up and down? Does he brag to everyone that he is a genius for predicting red? No. On the next spin, a woman puts $10,000 on the number 7. The ball lands on 7. The casino loses a massive amount of money. Does the casino owner cry? Does he get angry at the wheel? Does he double the table limits and try to win his money back on the next spin to defend his honor? No. He just watches. He does not care about the outcome of any single spin. He does not have an ego about the little white ball. He knows that the game is rigged slightly in his favor. He knows that if the wheel spins 10,000 times, the casino will mathematically walk away with a profit. The individual wins and losses mean absolutely nothing. They are just data points in a larger mathematical formula. You have to become the casino owner of your own trading account. You have to transition from prediction to probability. You have to stop trying to guess the future and simply execute a tested strategy based on what the market could do. When you place a trade, you have to accept the risk completely. Before you ever click buy, you look at your stop-loss amount and you say out loud, "I am paying this amount of money to find out what happens next." That money is already gone. It is a business expense. When you stop needing to be right on every single trade, the anxiety vanishes. When you stop tying your self-worth to the color of a candlestick, your ego starves. You will still have losing trades. You will have days where nothing works. But you will calmly close the laptop, make dinner, and sleep perfectly fine. Because you know the next spin of the wheel is coming tomorrow. Trading becomes incredibly boring. Trading becomes a quiet routine of clicking buttons when the rules are met, and walking away when they are not. And that is when the money finally stays in your account. That is when the chaos turns into consistency. It takes time to unlearn a lifetime of trying to force success. It takes time to realize that doing nothing is often the most profitable action you can take. But once you stop trying to fight the market, once you surrender your ego and let the math do the heavy lifting, you will find exactly what you were looking for. A very quiet, very boring kind of freedom.